Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hillenbrand Inc. quarterly report. Hillenbrand Inc. offers a diverse range of businesses and services through its two main segments, Advanced Process Solutions and Molding Technology Solutions. The company's Advanced Process Solutions segment provides various equipment and solutions for industries such as plastics, food, pharmaceuticals, chemicals, fertilizers, minerals, energy, recycling, and general industrials. These include process and material handling equipment, mixing technology, ingredient automation, portion processing, screening and separating equipment, aftermarket parts and service. In addition to these services, the Advanced Process Solutions segment also offers equipment system design services, compounding, extrusion, and material handling equipment. This segment caters to a wide range of industries, including plastics, food, pharmaceuticals, chemicals, fertilizers, minerals, energy, recycling, and general industrials. The Molding Technology Solutions segment focuses on providing injection molding and extrusion equipment, hot runner systems, process control systems, mold bases and components, and maintenance and repair services. This segment serves various industries such as automotive, consumer goods, medical, packaging, construction, and electronics. Overall, Hillenbrand Inc.'s diverse range of businesses and services makes it a significant player in the industrial equipment and solutions market. Hillenbrand Inc.'s stock price has remained relatively stable over the past year, experiencing only a -2.68% change in value. This stability can be attributed to several positive corporate actions and financial results throughout 2025. One key factor contributing to this stability is the company's improved earnings performance. Hillenbrand reported full-year 2025 earnings, with an earnings per share (EPS) of $0.61, a significant improvement from the $3.03 loss in fiscal year 2024. This turnaround likely provided support for the stock price. In addition to positive earnings, Hillenbrand also increased its dividend payment to $0.23 in the fourth quarter, which is generally seen as a positive signal for investors and can help maintain stock value. Furthermore, the company's president exercised options to purchase $373,000 worth of stock in December, indicating confidence from leadership. The updated financial guidance provided by Hillenbrand also helped stabilize expectations among investors. While there were some negative events, such as a hold consensus rating and a downgrade by one analyst, these did not lead to a decline beyond the -3.26% threshold for the overall year. Overall, Hillenbrand's positive corporate actions and financial results have contributed to its relatively stable stock price over the past year. Hillenbrand Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. Hillenbrand Inc. trades at a higher price-to-earnings ratio of 52 times and a lower price-to-book ratio of 1.64 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 68% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.85%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in a company can be attributed to various factors. On one hand, revenue growth is driven by market demand, such as the expansion of the durable plastics market, food processing industry demand, and recycling market growth. Additionally, strategic acquisitions like the one made by Lone Star can also contribute to increased revenue through consolidation and synergies. On the other hand, revenue decline is often caused by a decrease in sales volume, unfavorable product mix, cost inflation, and divestitures of business units. For instance, the company experienced a decline in capital equipment sales volume, lower aftermarket parts and service net revenue, and an unfavorable product mix. Furthermore, geographic regions such as Europe, the Middle East, and Africa, Asia, India, and China also saw significant declines in revenue. It is worth noting that some drivers of revenue growth or decline are not directly related to market demand or sales volume. For example, changes in trade accounts receivable, net and receivables from long-term manufacturing contracts can impact revenue recognition. Similarly, the sale of trade receivables under an agreement can also affect revenue. In conclusion, understanding the primary drivers of revenue growth or decline is crucial for businesses to make informed decisions about their operations and investments. By analyzing these factors, companies can identify areas for improvement and develop strategies to mitigate potential declines in revenue. The net income and profit margins of a company underwent significant changes between 2024 and 2025. The most notable decline was in net income, which decreased from $8.9 million to a net loss of $2.2 million. This represents an 89% decrease over the 3 months ended December 31, 2025, compared to the same period in 2024. The profit margins also experienced a downward trend. The gross margin dropped from 33.6% in 2024 to 33.3% in 2025, while the operating margin was negative at -2.1%. Furthermore, the net income margin decreased from 1.6% in 2024 to -0.4% in 2025. The reasons behind these changes are not explicitly stated in the provided information. However, it is clear that the company faced significant financial challenges between 2024 and 2025, resulting in a substantial decline in net income and profit margins. The analysis of the company's operating cash flow reveals a concerning trend. According to the extracted summaries, the company has consistently generated negative operating cash flow in both 2025 and 2024, page 38. This indicates that the company is not generating sufficient cash from its core operations to meet its financial obligations. While there are some instances where positive operating cash flow was inferred, page 25, these instances appear to be isolated and do not provide a clear indication of the company's overall financial health. In contrast, the consistent negative operating cash flow on page 38 suggests that the company is struggling to generate sufficient cash from its operations. Overall, based on the available information, it appears that the company is not generating positive operating cash flow, which raises concerns about its ability to sustain itself in the long term. The company's financial situation has undergone significant changes in terms of its debt level and interest expenses. According to the provided summary, the total debt increased from $1,524.8 million to $1,579 million, indicating a rise in debt levels. However, non-current liabilities decreased by $4.2 million, suggesting that while overall debt may have increased, certain types of liabilities have actually decreased. In terms of interest expenses, there is consistent evidence across multiple pages that these costs have decreased significantly. Specifically, interest expenses dropped by $4.9 million, 19.6%, from 2024 to 2025, and an additional decrease of $0.5 million was noted due to cross-currency swap agreements. These reductions in interest expenses suggest that the company has made efforts to manage its financial obligations and reduce costs associated with debt. The performance of various segments and regions within the company has been mixed in 2025 compared to the previous year. In terms of segmental performance, Advanced Process Solutions and Molding Technology Solutions have seen a decline in net revenue and adjusted EBITDA. The former saw a decrease from $511.1 million to $463.6 million, while the latter experienced a significant drop from $195.8 million to $86.6 million. Molding Technology Solutions also witnessed a substantial decline in adjusted EBITDA, dropping from $27.4 million to $16.2 million. On the other hand, corporate saw an increase in total assets by $25.2 million, but experienced a decrease in adjusted EBITDA by $1.4 million. Geographically, the United States and China have seen a decline in net revenue. The U.S. witnessed a significant drop from $284.7 million to $183.3 million, while China's net revenue decreased slightly from $81.1 million to $72.6 million. In contrast, India experienced an increase in net revenue from $57.1 million to $28.5 million, albeit a decrease overall. Germany maintained relatively stable performance, with only a minor decrease of $0.2 million in net revenue. Management's primary focus is on creating shareholder value through strong financial results and strategic acquisitions. The company aims to achieve this by selectively acquiring businesses that can benefit from the Hillenbrand operating model, HOME, which enables faster and more profitable growth. To support this strategy, management plans to make significant investments in international operations and continue investing in foreign jurisdictions. Management is committed to returning value to shareholders through a quarterly dividend increase, demonstrating their confidence in the company's financial position. The current liquidity position is deemed sufficient to meet all financial commitments, indicating stability and security for investors. Overall, the company's strategy emphasizes growth through strategic acquisitions, investments in international operations, and a commitment to shareholder returns. The company has made several strategic moves through acquisitions and divestitures to restructure its operations and focus on key areas. In terms of acquisitions, the company has purchased Schenck Process Food and Performance Materials, Linksys Group SAS, and merged with LSF12 Helix Parent, LLC. These acquisitions are expected to enhance the company's capabilities and expand its market reach. On the other hand, the company has divested several businesses to streamline its operations and reduce costs. The sale of Millicron injection molding and extrusion business to an affiliate of Bain Capital is one such example. Additionally, the company has sold a majority interest in this business, resulting in a loss of $3.4 million due to the divestiture. The company has a history of paying dividends to its shareholders. According to the financial records, the company paid out $16.1 million in dividends for the year 2025. This indicates that the company prioritizes returning value to its investors through dividend payments. On the other hand, there is no evidence to suggest that the company has engaged in share buybacks. The absence of any information on this topic and a clear, no statement in the summary confirm that the company has not repurchased any shares. That concludes the financial summary for Hillenbrand Inc. Feel free to comment below, and I will be happy to answer them when possible.